What's going on, everybody? Back with another video, and today we're gonna dive into the rate cut decision that Jerome Powell pretty much talked about and discussed yesterday, like his viewpoints. We'll look at the commentary, but before we get into that, shout out to you guys that's been supporting this channel. I know I'm not like the traditional YouTuber, so I'm gonna have to get like in the gist of the whole way I do this. But so far so good. I'm reading the comments, I'm liking the feedback. Anything that y'all think I can do better, shoot me some tips. If y'all know what this is. I'm just doing this because I wish there was something like this when I was trading that was out. Someone who was giving like real content that's not like lifestyle, but it's really something where you guys can really like learn, make money from and stuff like that. So definitely let me know what y'all want to see, or if everything's good. Look, don't, if it ain't broke, don't try and fix it. You get what I'm saying? But make sure y'all comment, like, subscribe, and turn on your notifications so you can get these videos as soon as they come out. And yeah, that's pretty much it. So I'm trying to figure out where I even want to start. So let's start on a dollar. So let's just go to the dollar. You guys know, since the last video, we are looking at the 1 hour just so we can see what's going on in the market. If you want to execute entries from these analysis, you can, but my stop losses and take profits are set on the monthly time frame. So you need to understand risk management if you're going to try to use this to your advantage. But actually, let's start with the economic calendar. So you really, since the top of the week into today, tomorrow's Halloween. All right, so midweek recap. So we're gonna start with the dollar, and then I'm gonna funnel back up to Australia CPI. I'm gonna talk about that, and then we'll talk about Canada. But nothing too crazy. Nothing from the weekly outlook that I talked about that is like that I didn't say was gonna happen. I'm not trying to like boost my ego, but pretty much what we said was gonna happen happened. And if you believe me and you act on it, you should have made some money this week. But yeah, like nothing crazy. So starting off with the Fed's fund rate, I told you guys, expect what the market was expecting. That's just what we do as traders, and then we react to once the data come out. And at the top of last week, I also told y'all on my X account, I told you guys to buy that. What was that 98.77? Whoo! This was premium knowledge if you digested that and really saw it play out. So going back to it, still same time frame, but back when we talked about it, we was looking at that moving average, the 200-day on the 1 hour, which was the 98.77. That's that key level. So anything below here were your buys. Like this was a easy, if you bought it at that 98.77, that was CPI, right? Yeah, CPI, we bounced and then we fell a little bit more. But you could really ride that trend all the way up to that monthly time frame. But that was a really good entry. I mean, that was a solid entry. Like, that was really good. That was good. And then FOMC sent that bad boy straight up, and now we're pushing back up, going into open. So the dollar, like I told you guys, from my monthly view, nothing has changed. Now we'll talk about what Powell talked about, but I mean, it's what they've been saying the entire time. So I don't know how long y'all been entertaining these markets or entertaining the economics behind these economies, but inflation was falling. At the top, at the mid, really this year, inflation started to fall, but inflation was it was high since COVID. So the markets were printing data that the Feds was getting close to their goal of 2%. That has started to shift change with the presidential elections, different administrations, the whole regime change, Trump, tariffs, all of those things. But I still think that a lot of this inflation is coming from consumer spending. I know a lot is consumers have slowed down, but it's because businesses overreached. Like, you got to think how economics work. If somebody's going to sell something for $10, right, and people are buying it, then they'll sneak it up to $12 and people will keep buying it. So the higher prices go, that's kind of where the president want the market to be. That's how you get all of the dollars back into the businesses, into the government. So that's kind of like what they want. Like, that high inflation is really what they want, but you'll cool it down so people can like enjoy life and enjoy the American dream, things like that. But when you think about it, inflation did start to fall. So the market started pricing in rate cuts, and rate cuts started, they really didn't start to come until I think September. And it was not because of inflation, it was because the labor market started to show signs of weakness. Now, that is the biggest concern for the Feds outside of price stability. Inflation, they're not saying that they lost control of it, but they're pretty much saying like, yeah, we were getting there, but Trump came and F stuff up. That's pretty much what Powell said. And he said, don't think we're going to continue to cut rates if this continues to follow, especially if the labor market is not as weak as most people are expecting. Now, if you look in America, look over here to Forex Factory. If we go over here to the dollar, let's look at nothing but employment. And let's go to, we're going to look at it from the month. Well, last month, I'm sorry, because this month it was like knock. So this was what the scare came from, all of this data. But y'all, all of that data was really from overstated jobs. Like, DEI played a huge part in that. Like, a lot of things played a part in those jobs. Joe Biden administration also overstated a ton of jobs, government jobs. It was just everything looked good on paper. And then Trump came in and everything revised down. And the revision is what scared people. Now that's just all balancing the market back out. We started to see unemployment claims started to fall. Job openings are still kind of solid. The only thing that was hard is small businesses are pulling back from hiring. Now, if you're on the lower end of the spectrum, right, you are affected when it comes to business owners, like small business owners. Inflation do take a lot of people out of businesses who don't know how to really start a business, but then they start a business, but because the market is moving, they are able to operate, but they're not profitable. So now they're getting to that break point, and it's showing in the data. But that doesn't mean that the labor market is weak. I mean, you look at the number of jobs open, you look at the number of people that's applying for jobs, there's like a 1-to-1 ratio. Like, most countries don't even have that. Literally, most countries don't have that. And if you look at, we haven't gotten any hard, like solid labor data, like unemployment rate and things like that, because the government shutdown has been delaying all of that. But if you look at the U.S. unemployment rate, it's still pretty low compared to UK, Europe, Australia. They're all at like, I think the closest one is Japan. Japan is at like 2.5, but that's also high for Japan. Because they have that, they're more of a manufacturing economy, so they usually operate with an extremely low unemployment rate. But Canada, I think, is at 6%. Y'all don't quote me on these, but they all are above America. I know that for sure. I think there's one, if it's not the UK, is no, I don't think it's Canada. I think it's Canada. It's one of them. One of them are close to America, but everywhere else is pretty much screwed. Don't even talk about emerging markets. They're at like 30% and up, like South Africa. But people just, when you're the best, people expect you to have the best. And that's like America. And I'm not saying America is the best, but when you're the world reserve currency, they expect you to have a certain amount of data that aligns. Like people are thinking like China is ahead, but not really compared to America. They're ahead in some areas, but because if you go look at China economy is like completely doomed. But nobody is saying that, but they're saying it's the greatest country in the world, or they are so advanced, blah blah blah. But their economy is literally like, did we not forget about Evergrande and all of that stuff that happened out there? All those delinquent, all them buildings they were building, nobody can pay on that. Air quality, it's a lot. You get so. America labor market, I just think has stabilized, and it went from one president to a new president. So that's kind of like what you will have in a sense. But listen, I'm not here to be a conspiracy theorist or a genie. But if you look at the unemployment claims, if you look at the U.S. Red Book, people still spending money. So it's like, where do they get that money from? Either it's going to come out of stocks or it's going to come out of crypto, wherever they're doing. And if they're doing that and they're not working, that's means that more, like, it's just, think about it. Just be logical. Um, so yeah. So solid. Also, job cuts had dropped drastically from that previous scare that they had. It was a nasty scare. It was at like 139% in July, then at 13%, then boom. So I don't think the labor market is really bad. And yesterday, Powell also stated that he really don't see any deterioration in the U.S. economy right now. Right here he goes, right here. Don't see any significant deterioration anywhere in the economy. That's pretty much it. If anything, I think the biggest scare is the revision of the labor data. Other than that, so dramatic reduction in labor supply affecting job market. So demand for workers has fallen. Now, a lot of people are making this whole call of AI is really killing the labor market. I don't really think AI is killing the labor market, because if you're a business owner, like even in your small business, you know that AI is not eliminating jobs. Like, I own tech companies and we use AI in our business, but it's not eliminating people. Now, what it may do is reduce the number of people you may need to fit up to your productivity for your business, but that also costs more. Also, like, if you have it's a lot of factors that play into it. So I don't think AI is really the biggest thing. I think the biggest thing is, at first the Feds were a bit hawkish and they were holding rates. So as the Feds were holding rates, companies pulled back from hiring. That's what happened. And then when the Feds start cutting rates, then that's when the jobs are going to start to be created again. Then the Feds saying they're going to keep cutting rates. So that's pretty much where it really came from. And then just seasonal adjustment, all of that stuff. Trump going in, actually investigating previous data, people cleaning up. You know how it is. Imagine if a football team get a new head coach. A lot of stuff gonna shift in that first week. A lot of stuff gonna make that. A lot of stuff gonna be questionable. Um, but yeah, that's that. Then if we take a look at the dollar from a technical point of view, go down to the hour, see where we're at. This bad boy just pushing up. Now, we already broke out this 1 hour resistance. We did get some rejection before, but usually when I break out of these Bollingers on the 1 hour, I like to go to the 4 hour to see the next area of resistance, which we can see is over at like 99.43, 99.60, but 100 is right here. And once we break out of that, then we just move on up to that daily. And that's right at that 200 day. So it all makes sense with the moving average, with the time frames. Really just running up this bull trend. And y'all know me, I trade out. So I'm catching this bad boy from the monthly. We have a long way to go. Literally a long way. But if we see like previous times, we keep hitting these levels, we have some massive candles that are closing on the monthly. So next month can be a massive move up to like 104 and go as high. I can see the dollar probably reaching above 114. Yeah, it depends on how hot Trump run this economy. The Feds literally just said they're about to start ejecting money into the economy. They're done with quantitative tightening. So they are they are stating that they're going to buy back bonds. The Feds only buy bonds when yields are high. They don't buy bonds when yields are low because there's no value for them to buy it when yields are low. So high yields, strong dollar, low bond prices, bond market crash. DXY becomes a safe haven. S&P still going. Like I said, I think the ceiling is around 7,000. If we may hit 7,000 just for narrative. That may, I don't know if that create buyers. If that create buyers, that's crazy. If anybody's buying that at 7,000, they're crazy. But definitely the bears are gonna enjoy the upcoming weeks for sure. I definitely think from a CFD perspective, if you want to short this boy, this is the time. Literally. Because I think last time we hit 6,000, we literally reject like 6,000. We had this big move to the downside. Boom. So that's what I'm saying. 7K. If we hit that level or we just reject, I'm expecting this bad boy to fall massive. Yeah. Massive, massive, massive. Especially if my thought on the consumer, because I think this consumer is stronger than what the market is saying, right? What the data is saying. But if that data is right and I'm wrong, this is going to collapse because those earnings are not going to be good. And Trump may have a nice little run, but those markets going to crash. But that stock, by the time Trump get out that stock market, get out that White Office, that stock market is not going to come down no time soon at all. Once he leave that White House, he's going to be good because he's going to buy this low. And when he retire, when his presidency ends, that boy is probably going to be at 10,000, probably higher, like 12,000. Trump is setting that stock market up to be good. It's going to take a dip, but that's going to happen globally. Everybody's stock market is going to take a dip because it's a global slowdown. If America slows down, everybody slows down. That's just that. And you want that price, not this. A man who knows, they will never tell you the right price to buy. Everybody who bought at that time when Trump tweeted was like buy stocks, they may get wiped out. They're gonna get wiped out if they don't hedge or if they don't take their profits because that pulled down back to that like 42 level. There's gonna be so many margin calls. So many people are gonna get wiped out. Institutions are gonna come low, buy heavy, boom, and then that boy is never gonna. It's not gonna come down there no time soon. Bitcoin. I mean, this boy is not even moving the dramatics. It's crazy when you see all these liquidations and things like that. This boy has not moved. Let's go look at Bitcoin on the 1 hour. It was trading in that range. Like I told y'all, I had shorted it over what was that Friday, but my broker didn't let me short it until the markets had open. So I'm in a Bitcoin short and I'm in profit. I expect that boy to fall, keep falling. Not much you can do. It just people just don't know how to trade, man. Euro USD, these are the ones that hopefully you guys took advantage of. CPI brought us right back up to that 200-day, that correction level that we follow to know in the range. So that was expected. Nice short if you took those Euro shorts. Already down about 20 pips, but on that monthly, this is where the money is really at for the people who got the shorts up here with me and over here. We are up about 130 pips. Not too bad. It's a good start. You gotta hold. Look, the euro gonna give the dollar a run for his money, so that's just what it is. You hedging it down, so. But when it falls, oh, it's gonna fall, just like it did right here. So we need to catch that whole move again, back down to parity. At least gotta fill this gap. It's a nasty monthly gap on this. Whew, I didn't even see this, y'all. Hold on. Did I see this? Huh? I gotta ask Mayor if I saw that. Cause, huh? Nice little get. Whoo. But them buys gonna though people gonna buy that at this support level because that look like a nice little consolidation. But this is the consolidation. That's where that parity is gonna hit. Europe is screwed. Do you hear me? Just take a look at Germany and France. They're done. So yeah, that's that for the euro. The pound is already taking the beating. Look like we falling off a cliff. Hopefully y'all ate this on the 1 hour on that CPI. Anything, I mean, that bad boy's just falling. We broke out of that Bollinger back from Friday. So you remember Friday, this is where we was at. Boom. We shorted that bad boy all the way down here. Boom, yeah. So nasty fall on that GBP USD up about 100 pips. I posted this on my X. Hold on right here. So if you was on my YouTube, that's that GU. I think we got that what 133? Geez, 13351. 51. Oh, yeah, I'm tripping. Look at me shooting myself in the foot. That's where we got that bad boy at. Y'all, I am tripping. Why I'm all the way down there? See, look, I'm about to throw myself under. So 133,517. Jeez, y'all, we are crazy on that bad boy. Off that 200. Yeah, off the 200 day. Right. How did I not know that? We up 181 pips. Not what I said at first. Pay me no mind. So yeah, that's how we ate that bad boy. UJ, look, I don't know if I said that we was gonna come back and test that 200 day on that USDJPY. I said that in that video. We were up here, and I was like, that bad boy is gonna pull back to that 200 day. Y'all, I woke up on Tuesday morning. No, what's that? Yeah, Tuesday morning, and I saw UJ had fell to that 200 day. And what did I do? Bought it 151.98. A little bit high, but I had a little drawdown, but it wasn't nothing crazy. It's like right here. So I had a little, but it wasn't bad. And remember, y'all, I'm swinging this bad boy up to 160. So, and I've already bought it all down here, like on the monthly. So it was a nice move on that 1 hour. That's why I do that 1 hour with y'all, so y'all can, for the people that's trading like prop firms account, you kind of can see what I'm doing. But that was a beautiful run. Rejecting right off those. That's why, y'all, these Bollinger Bands are the GOAT. They are the GOAT. The GOAT. And you have to respect them at all times. You have to. That's where the volatility is. But that UJ is gone. All right, now let's talk about this little Aussie. Because that had people panicking. But I'm like, why y'all panicking? All right, because what did I say in my last video? It's already too late to get in it. So you need to wait for the pullback because we sold this over here. So it was at a support anyway, and it just pushed back up to that resistance. So if you go into the 1 hour, the CPI came in hot because Australia is just that's short lived. You're not gonna see that. Now, are they gonna cut interest rate next month? If that labor market continue to weaken, that's Australia's problem. The labor market is weakening really, really bad. So this was the weekend we got that gap. So we was here before the markets closed on Friday. And then we gapped up, and I was like, oh, they gapping up because that CPI is going to be hot. So we let that boy rally, which is okay. Cool. It was already super low. We was already in profit. And then once the CPI data comes out, then that's when you react. Okay, it came in strong. Why? This is what happened. It's short-term inflation adjusting to tariffs. That's all what it was. And they said expect to see inflation fall lower in the coming time. And look at the market selling off. Also, the dollar is strong. And you never buy AUD USD unless it's extremely low. But this was a really nice short. And I got that short at 65.97. So it was right around, right around here. Little drawdown, but sitting in profit now. That's it. Nothing crazy. NZD USD, pretty much same thing. Thought we was gonna get that push up, rejection down. It's okay, not too bad. Still got me a short. Of course I did. Um, at 57.63. Yeah, this is what I got the short at, and I'm in profit now. So, well, a little drawdown, like 10 pips. Is that the like 10 pips? So, not bad. Well, now I'm in profit. The screenshot is old, so on here I'm in profit. So, wasn't too bad. Now we're gonna go down. I'm sure some of y'all sold higher. I hopefully you did. My drawdown is your opportunity. Just just like that. If I'm in drawdown, you need to be happy. You need to figure out, Jamaal, what trades you got in the red, not in the blue. People always want to see blue. No, you need to see my red. But yeah, that's the truth. Then we have this USDCHF. I told y'all that boy was the perfect buy when we was down here last week. If you bought it, look what happened. Now we just gonna probably keep on moving up. UCAT, same thing. Told y'all. I mean, pretty much everything. Canada, interest rate cuts. Expect what the market expect. Inflation is still going up. It's probably just gonna stay weak against the dollar. But Canada is gonna give America a run for their money. Just wait. But we bought this bad boy over here, so we just, I told y'all from the monthly, it's a bit too high. So if you wanted to buy it, you could, but yeah. So yeah, that's pretty much all I got today for you guys for that mid market recap. Now, I know I was gonna do that giveaway last week on Sunday. Totally forgot about it because I was in a rush because I was kind of on like a little mini holiday. But this Sunday I am gonna take time to do that giveaway and I'm gonna go through it on the live because I tried to ask Grope to announce the winners, but it wasn't grading the criteria or the rubric right of who could be the winner. So we'll do it together on this video, but make sure you guys like, comment, subscribe. Tell me what you guys think about this video in the comments. Let's check the YouTube to see if I had any. Actually, hold on. Let me check my YouTube. I just want to go through, see if there's any comments that somebody asked that I can go through while I'm on this live stream. But y'all, let's go look at DXY. Oof. That boy is gonna go crazy. All right, so someone said, brother, I need that one-on-one mentorship. Y'all, this is mentorship. This is free mentorship. But I get it. If you need that one-on-one, y'all, I'm currently not mentoring at the moment, but I will be starting back doing mentorship soon. I probably do like a group of like 5 to 10 people because I don't like to do like these big groups when it comes to mentorship. And keep in mind, this is not a course. A mentorship is you and I going through what you're doing, not me just teaching you stuff, because you can go and learn stuff on Baby Pips for free. Yeah. Someone asked, let's see what this says. Do you always do technical analysis on all your trading assets you take before you buy the asset in TradingView? Yes. Anytime you buy or sell an asset, you need to do a technical analysis, even if it's spot, even if you're just buying it to buy. You need to know the risk associated with that price that you're buying it at. But good question. Everybody's just asking me for mentorship. Okay, Frederick, I be seeing you. I see you in the comments, man. Jamaal, if the U.S. Federal Reserve is not the most, I'm sorry, if the U.S. Federal Reserve is the most hawkish major currency bank, Why isn't DXY at 20-year highs? I don't move the market. No, that was a joke. But this is the thing. Markets move on sentiment, not on just a line in a sentence where you put two ideologies together. That's not why the market moves. And then you associate it with 20-year highs as if, why couldn't it be at 10-year highs? Why couldn't it be at 6 months highs? Why couldn't it be at 14-week highs? The question is too it's too surface level. When you know how the markets actually move, you will start structuring your questions to get answers that actually can be given with logic, if that kind of makes sense. Because, listen, all questions, there's no such thing as a stupid question. I will say that. So don't be afraid to ask questions. Hey, but you have to be able to accept the feedback that somebody give you from the question that you ask without being offended. But here's a good question that you ask. The Bank of England is perceived to be behind the curve on inflation and is expected to hike rates aggressively over the next 12 months. The Federal Reserve, meanwhile, has signaled a pause and potentially even future rate cuts due to weakening U.S. economy. So, how will a sharp, unexpected rise in global risk aversion impact the GBP USD pair, considering the U.S. status as, well, first off, okay, you had me at the beginning. All right, now I get what you're trying to ask, but again, a banking crisis shouldn't be used as something to determine why you're buying a currency pair. That banking crisis can happen and the currency pair can still just not move. Now, in times where there is global panic, people go to the world reserve currency, which is the dollar. If people then pour into the dollar, then what will happen to the value of the dollar? The value of the dollar goes up. If people are pulling back from all global economies because the US economy is growing faster or better than other economies, then we may see the value of all currencies fall against the dollar. That then will make GU probably move lower with the exchange rate. So I think a lot of you, not a lot of you, I'm sorry, y'all, take that back. I think a lot of traders overthink how markets work. And if you ever find yourself like trying to put a puzzle together with trading, you need to start over with learning what trading is. Because I think most traders, they think they're putting together a puzzle. And the puzzle is simple. It's the core principles of trading. You just put them together. You got the risk management, you got the technical analysis, you got the fundamentals, you got the micro, you got the sentiment. Like you put it together, you have your edge, right? And you have a system, which is the edge of the puzzle, and you just put it together. But it's like, don't try to make the puzzle piece a puzzle. Like you got the puzzle piece already. Don't try to make that puzzle piece a puzzle that you're putting together to have to put together with the puzzle that you had at the beginning. I hope that makes sense. I try to use analogy so people understand. Don't overthink this. It's not this complex. I promise. It's not that complex. Don't look at one situation to move something. So for you to make money, buy low, sell high. That is it. Follow the trend. Use risk management. What's your account size? This is what you can afford. That's it. It's not hard. I promise. Don't get caught up in all these fundamental questions, and then when something don't go your way, you think you don't know what you're doing, or you're lost. That's just not what these markets are for. It's not for people like you. For people who think like that. Sorry about that. All right, y'all. So that's pretty much all I got for the questions. On my YouTube. Other than that, Hope you guys enjoyed this video. Check back Sunday. We have some PCE. Hold on. I thought we was gonna have PCE data on Friday, but I don't think we got that. I think they took it off the calendar because the government shut down. But the weekly recap will be out on Sunday before the market opens. So yeah, that's all I got for y'all today.